The rand held firmer against the US dollar early this morning, with traders awaiting the outcome of the US Federal Reserve policy meeting. The local currency climbed to its strongest level in six weeks yesterday in a rally driven by renewed hopes for a COVID-19 vaccine, as well as upbeat Chinese economic data. Locally, the focus on retail sales for July due later this afternoon. But to help us understand the latest developments on the local index, we're joined now by Chantal Marx, and she's the head of equity research at FNB Wealth and Investments. A very good afternoon to you, Chantal. If you could just take us through how the markets are performing so far today.
So the South African market is actually kind of tinkering between gains and losses this morning. And unfortunately, it seems as if very positive sentiment from a global perspective has failed to translate into any meaningful gains locally. And it seems as if the problem is that a rally in South African incorporated shares has seemingly halted. If you look at the rand, it has strengthened quite nicely in line with positive global sentiment. But the market isn't really going anywhere, and those losses seem to be led by financial shares and South African retailers, with the Foschini Group really leading those losses following a disappointing trading update yesterday.
And are there any developments on the commodities front?
So commodity prices are slightly stronger today. The oil price has also rebounded, and that is also in line with positive global sentiment, with global growth seemingly a little bit more robust than what would have been expected a few months ago. We also saw the Organization for Economic Development and Cooperation update its expectations for GDP for this year. They now expect a much smaller decline in global GDP than they previously did. And if you looked at that Chinese data that you mentioned earlier on yesterday, it does seem as if things are going a little bit better than expected outside of South Africa, at least.
And the packaging company Impact has declared a force majeure at the Springs paper mill. If you could just take us through the developments there.
Yes, it's quite disappointing because this specific substation in Ekurhuleni has been a problem for months and months, and it's been an issue for Impact for quite some time. And what the force majeure means is that they are not confident that they'll be able to deliver on contracted volumes. And that is because they are unable to keep their manufacturing facility going because they don't have solid electricity supply, which is extremely disappointing. I mean, this goes beyond just load shedding and what they can plan for. This is a power outage or intermittent power outages or blackouts that has hit that community and that specific area of Ekurhuleni for quite some time.
Now, retail sales figures from July are expected later. What can we be expecting from that data?
So retail sales will probably improve on a sequential basis. So if you look at it month on month, we expect an improvement there just because of base effects as the economy has started opening up. On a year-on-year basis, though, we still expect retail sales to move backwards. That'll probably be the story for the remainder of the year, just because activity levels were a lot higher last year than they are right now.
And if the president tonight announces a move to level 1, how are markets and perhaps crucially the travel and entertainment sector, how are they likely to react?
Well, it all depends on what level 1 is and whether or not there will be different stages or versions of level 1. I think that the expectation for level 1 and for further loosening of economic restrictions would have been expected by the market, and you might have seen already an improvement in the share prices of some of these companies. But I think that the very meaningful shift will be when international travel is allowed, and I think that will really be a game changer for the local travel and leisure industry, and that certainly could be a catalyst for those stocks to make a bit of a comeback.
Chantal, before I let you go this afternoon, I'd like to go back to Impact and the reasons why they called a force majeure. Sustainability and the availability of power in order to do business. Are we finding this to be an impediment, for other businesses and other sectors to this extent?
Absolutely. It's a major impediment in terms of day-to-day planning on the manufacturing side. I know some of the mining companies have also complained about intermittent power outages really halting their ability to produce the volumes that they would like to produce. And more importantly, what a lack of electricity supply results in is companies and manufacturers and miners holding back on very, very needed fixed investment expenditure, because why would you expand capacity if you might not be able to actually use that capacity because you aren't getting a solid supply of electricity? I think it's probably one of the most urgent reforms that need to happen, and I think that it's really a space where the private sector can slot in quite nicely.
And how are companies capacitating themselves for an alternate energy mix where they are not just reliant on the grid?
So I know that many of the large shopping centers, as well as some of the larger mining companies, are really interested in leveraging off of the solar capacity or the capability that they could switch on quite quickly. Solar is a pretty easy install relative to some of the other renewable energy sources or other non-renewable energy sources, and I think that many of these companies will opt to put in their own infrastructure, particularly on the mining side, where you currently have a quite low cost of production relative to commodity prices. So you could probably motivate to add a little bit to your cost of production by getting off the grid and getting those volumes to come through.